I'm Debbie Bell-Hosking for FinextraTV at the SBS Summit 25 in Paris, and I'm joined by James Powell, Global Head of Lending, SBS. Welcome, James, to our Summit studio.
Thanks for having me.
We had such a good conversation off camera, so let's keep that energy going.
I'll try my best.
We were talking about auto and other asset financing that you're doing both in Europe and the US. My first question is, what are the differences you're seeing in the space?
That's a really good question. So I'll go to some of the macro things that the industry has been talking about for many, many years. I'll talk about, can't talk about the US without talking about tariffs and the impacts, but the key things in auto finance specifically has been around electric vehicles, the transition to electric vehicles, particularly Chinese manufacturers. And then there's another big topic that's dominating the agenda over the last few years around the change in the distribution model. So one at a time. Electric vehicles is, if you think about the Chinese manufacturers, is happening here in Europe, is happening all over the planet. They're coming in with good products, they're transitioning the way that we're doing business, they're putting pressure on all the existing OEMs. That's been less of a case in the US because of tariffs. It's kept the Chinese out, which has really changed the situation. So there's been a rise in EVs driven by Tesla, driven in certain states, but a very different dynamic to what we're seeing here in Europe, driven by that. And then I talked about the distribution model. Distribution model, just so you're aware, is there was an engineering of a situation called agency, which would have removed the dealer from the traditional distribution model, if you like. Lots of companies, like Volkswagen and other big manufacturer captives, were pushing hard for it, and it became a real thing in Europe. Some people got into it, tried it, tested it, and then they've pulled back. It's a different situation in the US because, again, a little bit of that, let's call it protectionism if you like, but they've got a really strong dealer body. Some of the state legislations were driving that out, so they didn't have to worry about that. And what that's consequently meant is I think the US has been more focused on doing the things that they want to do to be able to move the business forward to meet the fast changing, profound changes going on in the automotive sector. So I think that's been an interesting difference at the macro level. When it comes back to things that we do, which is we offer systems and we put systems in Europe here across multiple geographies. So customers like BMW Financial Services, Toyota Financial Services, Mercedes-Benz, Mazda Finance, we've made a living out of putting a system in that manages their operations globally, or in this case regionally in Europe, and it manages to standardise operations. One of the things that's really interesting that I think is probably more a similarity than a difference is I thought it'd be very different when we went to the US because US focused, US centric. Actually, the reality is that we're putting in systems for people in the US, Canada, Mexico, and even Brazil. So we're seeing some similarities there as well as the differences that I pointed out.
Okay, great. So we've touched on the differences and the similarities.
Yeah.
Now let's look at where you are seeing lenders investing in order to upgrade their legacy systems, and also within that, are you seeing returns?
Yeah, sure. So, I think it's all the typical places. I think there's a big focus on the customer journey. Now, whether that's the retail customer or whether that's the commercial customer, people are digitizing. They're making sure that the customer journey is following technological advancements that are available, and it's also meeting the customer's needs to have a more digital, self-service type of experience. I don't want to spend too much time on COVID, but COVID just drove this in the auto sector. If you think about going in and buying a car on finance, we would always go into a dealership and we would sign a document, and then obviously people weren't doing that during COVID. They were staying at home, so that drove e-signature and all these other technologies that have been around for a long time suddenly became adopted. So we're seeing an extension of that. I think if you bring it up to date now, people are looking at the customer journey, as I've said, lots of money going into that front end, looking after the consumers, looking after the dealers as well, because that's their other customer. But I think what people are increasingly realised is that all of that is being constrained if they don't have the right back office processing systems, because in order to give that good customer journey, personalised customer journey, we've been talking a lot about that at our seminar, you really need the right data to be available in the right place and be exposed. You need APIs, and that means a modern core. So I think what we're starting to see now is a lot of investment going in the back office as well as in the front office, and all of this sits with data at the heart of it. And then I can't answer the question without mentioning AI. People are really now spending lots of money on AI. Now this is, for me, is a really interesting, we're at an inflection point. because we're quite a way down the road from ChatGPT. Everybody understands the value of AI and specifically generative AI. Everybody's got an initiative out there. Every lender in the world has got an initiative out there. Some of them are big, some of them are spending lots of money, some of them they're just testing the water. I've been talking to clients in the last couple of days. The real interesting situation is, are people just looking at solutions so they're doing AI, or are they looking at the business outcome they're trying to achieve and then applying an appropriate solution? So I think the next period of time, absolute huge investment in AI, but I think people are going to need to be clever and focused about what they do on the business outcome.
Yeah, I often hear that echoed in that, look at it as a business and see the problem you want to solve as a business first, and then apply your solution.
Absolutely. I was talking to a customer earlier on, and he said he's frustrated. He said because the last thing we want to do as technologists is let the technologists come up with solutions that's not solving a problem. And he was saying that he's got a bunch of people in his bank that are just under pressure to do AI, and they're building AI solutions. Well, the reality is, go see what the requirement is and try and solve the problem. And that might be AI, and it probably will be increasingly AI.
So interesting how everything's unfolding.
Indeed.
So talking about things unfolding, SBS has recently announced its work with NextGear and AIM in the US market. Can you tell us a little bit more about these partnerships?
Yeah, well, this is super exciting. I've been involved in that from the beginning. We made an acquisition a few years back of a digital solution that was intended to digitise a long-standing manual process that's essential in auto lending, auto finance. And that really, I tried to keep it simple, is if you are lending lots of money to me, a dealer, and other dealers all over, let's say the US, you want to know that those vehicles that you're lending against are there. So you send someone around in a plane, in a car, to go and check those vehicles. And that's the essence of what we call inventory auditing. The solution that we acquired and then developed on and ultimately sold to NextGear is about digitising that process, firstly for the back office people, so the people inside the lender, but also allowing that to be a self-service audit process with the dealer. So that was something that, if you mentioned that 5 or 6 years ago, people go, the dealer auditing themselves, marking their own homework. This has become a reality. And NextGear was a fantastic partner because they wholeheartedly knew this was the way to go, and they were forthright. They knew it was going to be disruptive to their customers. We jointly worked with their customer base to say, what's this going to mean operationally from a risk perspective, a cost perspective, and they rolled it out across 16,000 dealers in the US, so it was huge. And what it's done is it's proven that this process that was in place for probably 50, 60 years could be disruptive and transform, and it's transforming the industry, so it's been incredible. So, and you mentioned AIM as well?
Yes, that was AIM, yes.
So it's really interesting with AIM because in the case of NextGear, they had a large team of people that was outsourced to another organisation that were doing all this running around. By the way, you can imagine the green impact as well of not sending people on planes. They had this large team. What they did when they adopted our application was to remove that team, and then they created a small internal team. And they invested in that. So suddenly, instead of having hundreds of people from an external organisation, they had a handful of people inside their organisation. Perfect model for us to put digital audit in to the dealers and into that team. What we realised though was other organisations who were going to go on this transformation path didn't want to have their own internal audit team. So we were in a situation where we had digital audit, but the customers were saying, but I need a physical element still, because I still need people to go and look at the dealership and understand the environment that the application can't do. So we realised we had a hole in our offering, so that's where AIM comes into it. We formed a partnership. They're a traditional physical audit company, and now we have this hybrid audit situation where they can go digital with a physical element to it as well. And that's a game changer for us in the marketplace.
Talking about game changers, just briefly as we come to a close, how would you say partnerships have enhanced this digital audit solution?
Well, I think for me, I mentioned it just now, is digital audit is so transformation in there. And again, I love the auto finance industry, but there's so many different things that have been around. I said 50 years, you could probably talk 60, 70 years. And I've watched the evolution of various processes. And what I just described now with the digital audit solution and that partnership with AIM means that customers now can reduce their costs by, in some cases, 50%. I mean, crazy money. We've had examples of it being even higher than that. but also improve their green footprint. Because instead of, and it applies to all geographies. I talk about the US because of the nature of the geography, the size and the disparity, but I mean, that's revolutionary. And the other way, more generally, the answer to your question, I think with software companies like ourselves is, you go back 20 years, a software company like SBS want to build software, more software, more software. And now I think people have had a massive realization that what you really need to do is you need to leverage and orchestrate a series of partnerships in the ecosystems and pull best of breed from different places. And AIM's a good example of that, but there's many other examples of where we don't want to be spending our money on things that are not our core competence. There's things that exist in the ecosystem, and our challenge then becomes how do you connect them together to deliver customer value.
Yeah, connecting the dots, but expertly.
Yeah, partnerships are absolutely key to that.
James, thank you so much. It's really been interesting, particularly to talk about the auto trade and the partnerships and the lending. So thank you so much.
Thank you. Thanks for the opportunity.